be a strategic video on the New York reopen on Tuesday, July the 15th. I'm going to try to break this down for you very quickly. In the prior session, pre-market, we did make all-time new highs on NVIDIA news, and we also had a little bit of CPI news here, which pushed us even higher. So the rest of the day, though, when the New York Open as well as the finish of the New York Open was spent chopping back and forth and with a slight downtrend and then a more steep downtrend towards the end of the day. Now at 8 o'clock, you can tell when the market reopens in New York by looking at the VWAP, because the VWAP will always reset to the new level at the New York reopen. So if you're ever not sure where the New York reopen is, just look for the vertical VWAP, or you'll see that's exactly where it opened. Now, something you always want to keep in mind when you have a sell-off like this and you're looking for a bounce on an oversold MAC D, try to check out what's going on with MAC D, because it'll give you clues and it'll give you really great entry signals by watching where the fast cross is and then a back test of the fast line over the slow line. So as soon as you see this cross right here, you know that you're looking for a potential entry, but you need a back test. And what was great about this particular trade was that the price continued down while MAC D continued up. And we call that divergence. I'm sure you've heard of this before, but just in case you haven't, it simply just means that you've got price where it shouldn't be. It's diverged from where it should be. It should be rising with MAC D or stochastics, as the case may be, but instead it's falling. So what I like to see for my entries is a fast cross and then a back test. And typically what you've got here is a 5-minute chart, which is going to show you exactly where to enter, okay? The way I enter these types of situations is the following. I'm looking for my first 1 or 2 green candles to give me some Fibonacci levels to use. Okay, so what I'll basically do is I will go wick to wick, and I will say, okay, let's take a Fibonacci retracement, and we'll go wick to wick, and we'll see if we get a bounce off the 50% level. Okay, in this case, okay, it didn't make it down to 50%. I don't know if you can see that very well, but this candle and this wick on this next candle never made it down to the 50%. It made it down to 60%, but not 50. So that, to me, that's not good enough. I really want the best possible edge I can get with the trade. It needs to go down to 50%. So then we take the next candle. When we complete the next 5-minute candle, we're still going wick to wick here, because this is the move that we're looking for, the lows of the move to the highs of the move, okay? So we measure the high of the move here, the low of the move here, and we look for a retracement to the 50%. And guess what? This time we got it. Bingo, right on the 50%. Just it wicked right down to it. And I'll show you on a 10-second chart. I don't want to overdo the 10-second charts because it can be a lot of noise. But this is what it looked like on the 10-second chart. The very quick wick down here, but a very clear back testing of this liquidity grab here area and a bounce up. So with this, you'd be safe to enter here on this next candle or at the completion of this one, either one, with a stop under the candle. So the stop would be about 10 points. And you could write it up to VWAP, which would give you about, let's see, that's about 10 points. About 10 points. And, it's a pretty safe bet that trade's going to work when you see all that stuff. So it did pull back quite a bit and then ripped up higher, and now it's just chopping. So you want a kind of a 10-pointer in the bag. That's what you do. You watch to see where a rapidly falling price is going to find a foothold by doing a fast cross on the MAC D and a back test of the MAC D, and then you start measuring your green candles and find the one that retraces to 50%. Okay, I've made a lot of videos about this. I'll keep making them until everybody understands this perfectly well. I know it might seem a little complicated, but all the tools are on TradingView, and they're really not that complicated. The only thing you're using is this MAC D, and the way that you find that is simply going to moving average convergence divergence. That's it. That's the only one I use. I use volume, I use VWAP as an indicator, and I use a few moving averages. These are your 2-minute, 20 moving averages, a 5-minute 20, and a 5-minute 50, and a 5-minute 100, and a 5-minute 200. So basically that is it. I just wanted to show you that trade. Hope you had a good trading day, and I'll talk to you in the next one.